The chief of our central bank, Mr. Tiff Macklem, sat down in front of the Federal Finance Committee last week and he made this statement. He said, the monetary policy cannot fix the housing crisis. We tried lowering the interest rate and we tried raising the interest rate and it didn't work. How cute is that? Like, I would like to remind him that he's the one who actually started the fire and then he became the firefighter again. Like, when you keep the interest rate at super low and you kept it for a long time, it is going to distort the economic situation. That's exactly what his monetary policy did back in 2020 and 2021 when he kept the interest rate so low that the money became so cheap, so attractive. So all the consumers and the investors jumped into it and they actually leveraged themselves up and start buying assets. And real estate is one of them, right? In Canada, TXS doesn't get a lot of attention compared to real estate. So definitely the interest rate has distorted the economy, has distorted the housing market. Yes, of course, it cannot alone fix the housing crisis. Housing crisis has so many different factors, like immigration, like structural shortage, and then the overall, cycle of approving the permits and all that stuff. So all of these things contributed towards the housing crisis, but interest rate is actually one of the catalysts that is fueling the demand and that is also deflating the bubble at the same time. For him telling Canadians that the monetary policy cannot fix the housing crisis, that is very disingenuous, to be honest. On the other side, the hope for rate cuts is starting to diminish slowly. Last one we saw, Bank of Canada came out with a very dovish tone. We saw Federal Reserve came out with very dovish tone. And now suddenly last week, things started to change. So Bank of Canada also said, I'm not closing the door of interest rate. The Federal Reserve chair today also said that he is not convinced that this is the time to start cutting rates because the economy is super hot. Believe it or not, in the US, they posted record jobs numbers last week. So when you have the steaming hot economy, when you have astonishing job numbers, why you have to start cutting rates now? Like, it doesn't really make sense. Now, we can question those job numbers, we can question those GDP numbers, that's fine. But right now, these are the official stats. And if you follow the official stats, then right now it doesn't make any case for the rate cuts. I'm seeing a lot of optimism in the real estate market in Canada. I'm seeing some pictures from Twitter that people are lining up for open houses in GTA or in Vancouver. And I think one house was sold with 84 offers. That's the kind of a sentiment I'm seeing in the market. And I mentioned in my previous video that we will see a little bit of uptick in the market based upon that dovish tone from Bank of Canada, because the market tends to front run the sentiment before the prices actually goes up. So this is going to be a short rally based upon that market sentiment, but then when people realize that the rate cuts are not going to happen anytime soon, so then they will realize it and then they will start backing themselves up. So we will see, similar to last year when we saw there was a spring market rally and suddenly it died down because when the Bank of Canada came out with another rate hiking cycle in the June time frame, the market completely collapsed and then we saw there was a complete dead silence in the market. And this is and I see this is going to repeat again based upon that sentiment, because sentiment drives the market, right? So right now sentiment is rate cuts are about to happen, so let's go shopping. So that's the sentiment market. Of course, it's the journal buyer. You and I know that this is not going to be a bullish signal for the real estate. Also reading an article on Bloomberg, and according to that, the insolvencies in Canada has been rising at a record pace. So according to that report, the business insolvencies has gone up by 41% compared to 2022, which is the highest in the last 14 years. And if you look at the consumer side of insolvencies, that has also breaking record as well. We haven't seen that kind of an uptick in the last 13 years. So when we're seeing the insolvencies are on the rise, both on the business side and also on the consumer side, that doesn't paint a good economic picture in front of us. A lot of real estate projects are right now being sent into receiverships. If you don't know what is receivership, basically it is the creditors who are asking the jury, the judge, to intervene and take over the project because they fear that their money will not be recovered because the project is stalled, the construction is stalled, the builder is underwater, and when it happens, then these projects are basically taken over by the jury, and then they actually start looking into it and maybe start selling assets to recover the recover the overall cost. So we're seeing a lot of real estate projects, like big commercial condo projects, are being sent into the receiverships, and we haven't seen that number in the last 36 years. So that has been a record. And the reason is the higher debt servicing cost, higher construction cost, and higher labor cost. These things are contributing towards the construction cost. So the builders who started those projects 3 years ago, 4 years ago, they are now not able to complete them because their budget has been overblown. They have already overspent the money, and they don't have enough money to continue the project. So the creditors, the lenders, when they look into that, obviously start to panic and recover their costs before it goes further underwater. So the receivership has been on the rise, insolvencies on the rise, and at the same time we are seeing inflation is also sticking around at 3%. So in that case, I don't know how Bank of Canada is going to shape up their monetary policy. It's not an easy job. If they lower the interest rate, it can re-accelerate the inflation, which is already too high. Okay, even if you remove the shelter costs, it is still too high. The food is high, fuel is high, right? Majority of those CPI basket are still going up year over year. So if you start cutting rates, it will re-accelerate the inflation, which will definitely erode the purchasing power, which means the Canadian dollar will lose its purchasing power against the other currencies, especially US dollar. They keep it that high level, then it will definitely going to bankrupt a lot of other businesses and also cause a lot of problem for the consumers who have leveraged themselves with the higher debt compared to their income. So this is not a really good situation to be in. I don't know about you. I was also going through a very high debt to income situation, but then I try to deleverage myself, downsize my property so that I can carry the debt that I can sustain in these economic times. Anyway, you let me know what you think about that. Put your comments down below, let me know, and I'll see you in my next video. Take care.